Hey everyone, my name is Jack, and the recent market dip has been caused by quite a bit of panic selling. Now, some of this panic selling is admittedly justified. Those close to retirement or who are out of work may need to liquidate their investments just to make ends meet. However, much of this panic undoubtedly comes from the infamous sunk cost fallacy. This means that a lot of this panic is not logically justified. Now, before we move any further, I just have to emphasize that I am not a financial advisor, and this video is not financial advice. I'm just some guy on YouTube trying to add to a broader discussion about investment and personal finance and navigating the stock market through a tumultuous time for many investors. You should not take what I say as advice, and if you need help in making your own investment decisions, be sure to consult with a licensed financial professional. However, you do not need to consult with a licensed financial professional to give this video a like. So what is a sunk cost fallacy? A sunk cost is a cost that has already been incurred and has no way of being recovered. The key point is that a sunk cost can no longer be avoided. That's just it. It's sunk. No matter how much effort and time you put into something, there is no way of reversing a sunk cost. It is completely in the past and is of no use to actually look at. Now, a sunk cost fallacy is using a sunk cost in making a decision for the future. The reason it's a fallacy is because considering sunk costs is completely irrelevant to future outcomes. The only thing that a person should be looking at when making a decision is the expected future benefit of that decision. Looking at sunk costs ignores that rule. Time is a great example of a sunk cost. If you have a project that you've worked on for 2 months and you expect it to take 1 more month to complete, then the 2 months that you have already spent are a sunk cost. There is no getting that time back. The very common, well, we've made it this far, so we might as well keep going, is technically a sunk cost fallacy. You are looking at the past cost in making a decision for the future, and that's not logically coherent.
Indubitably.
Instead, what you should be asking is, will it be worth it to work 1 more month to get the expected payoff? That can change in value from the beginning of the investment to the end of the investment, whether that be time or money. It's whether you should use your future time for something else rather than spending it on this project. It's opportunity cost at its finest. Market losses are another type of sunk cost. Should you hang on to an investment? The answer does not lie in the prior week's losses. Instead, the answer lies in the future expected returns. So does it make any sense to panic sell? Well, if you're looking at the market decreases in making a decision to panic sell, then no, it does not make sense. You are focusing on a sunk cost. Deciding to sell an investment because of the prior performance is a sunk cost fallacy. Your decision to hang on to a stock or other investment depends on the future expected payoff of that investment. A sunk cost does not change this analysis. Or put another way, an investment's future expected return is not determined by any sunk cost. Panic selling only makes sense if you have nowhere else to go. If you're going to be unable to meet your mortgage payment and you're going to be kicked out of your home unless you panic sell right away, then by all means, panic sell. Waiting for a 7% annual return is pretty meaningless when it means you're not going to have shelter. If you're going to starve if you don't liquidate your investments to buy food, then obviously panic sell. But are you just intimidated by last week's losses? Don't panic sell. Ultimately, when to sell depends on your future outlook on an investment. The only consideration that you should make is the future expected outcome of an investment given your risk tolerance and your time horizon. It follows that the only time you should sell an investment is when you think the expected payout is not enough given your risk tolerance. Even if the market drops 30% in just a few weeks, as it occasionally does and as it just did, does that mean that your investment still won't bear fruit in the long run? If you were to start investing today in the same investment, would you expect that investment to go up in the long term? If you were to start investing today in the same exact investment, would you expect it to go up within your investment time horizon? If you're investing to retire 30 years from now, we can safely assume that if you're in a well-diversified index fund in the stock market, you're probably going to be up over the long term. But if you're investing in the hopes to turn a profit within 1 year, then your decision may be very different. Before pressing the panic sell button, look closely at the risks that you're taking and what your goals are for investing. Looking at your goals and your expected payout compared to the amount of risk that you want to take is the important distinction and decision to make. How long do you have left before you want to cash out for good? Do the risks associated with this investment, have they changed since you first made it? Has your personal risk tolerance changed? You should be looking at the present circumstances, not the past losses, not the sunk costs. Unfortunately for investors, panic selling can be very costly. In the case of the stock market, panic selling can be one of the worst decisions to make when you're investing for the long term. Missing just the 10 best days in a 20-year period can kill returns. As studies by Dalbar and JP Morgan show, missing the 20 best days between 1997 and 2017 would have meant that your return in the stock market would have actually been negative, assuming you held on for every other day during that period. And oddly enough, often the best days in the stock market occurred within 2 days of the worst days during the same period. So selling in a panic sell during a downturn can be catastrophic for your long-term returns. Selling in a downturn will only increase the likelihood that you're going to miss those best days and that you're going to miss the chance to actually produce a lot of the profit that a long-term investor can get in stocks. Well, you might be asking, why don't I just panic sell now and then buy at the lowest point in the market? Well, the problem is that's much, much easier said than done. Timing the market is an incredibly difficult feat in itself. There's no telling what direction the market is going to take in any given day. It may open super low and then still finish positive on the day, or vice versa. There's no real telling what one specific day is going to do in the stock market. And the short term is very hard to predict. An alarming news story might drastically swing the market in one direction, only for it to be turned around 2 weeks later by new stories. Is attempting to time the market worth missing the 10 best days in a whopping 20-year period? Probably not.
Okay.
In conclusion, by understanding that sunk costs are permanent, you can make much better decisions by focusing on future outcomes. This approach extends well beyond just investing. It's good economic thinking. Looking at the cost of something from before is irrelevant. It's sunk. There's no changing it. The only important consideration is the cost and the benefit of staying invested now. Well, that's all I got today. If you like this video, be sure to give it a like as it helps the channel out a lot. If you like this sort of content about investing and stocks, and I have other content on real estate and personal finance, be sure to subscribe so you don't miss any of my new updates. And what do you think about the current crisis in the markets and the situation that we found ourselves in? Love to hear your thoughts on the situation. We can get a better discussion going about your investment philosophies and what you're doing to protect your assets, or maybe you're getting more aggressive. I'd just like to know, so leave the comments below and we can get a discussion going. But until next time, take care.